afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. These are the top headlines that we're tracking at this hour. Indian markets look set to post weekly losses, with auto companies being the biggest laggards today. Aurobindo Pharma receives a warning letter from the US FDA for its API facility. The stock is down close to 5% in trade. Nirmala Sitharaman is chairing her first GST Council meeting as chairperson today. And crude continues to trade higher despite the US calling off a retaliatory strike on Iran. Good afternoon, Brijesh. Well, a sharp fall now has come in, I guess, in the last 15 to 20 minutes of trade.
Yeah, well, we were looking at a sharp gain yesterday and a really sharp fall coming in the session. And look at this corrective move that has happened. It's not led by banks, by the way. If you look at the bank Nifty, yes, it is soft as well. But this move is not led by banks because the banks, while they have had a correction, it's only 0.6%. Let's bring up the heat map. And actually, the advanced decline ratio might also be worthwhile, though it may not have changed as materially right now. Look at this. Just a small blip here, but nothing too dramatic because large caps tend to react first and then the mid caps tend to follow. But bring up the heat map and let's see what's happened to individual pockets of strength or weakness. Lots of red, very little green. So that's something that you got to keep in mind. UPL is probably that lone stock which is marginally in the green. Otherwise, you don't have too many gainers. But look at the set of losers out here. There's a clutch of names which have fallen. Yes Bank being the principal loser, but Maruti, maybe that downgrade acting upon Maruti, but otherwise as well, autos have been under pressure. So Maruti's amongst the top losers. There's some weakness in heavyweights like HDFC, for example, 2.5% lower in trade. Bajaj Auto, Kotak Mahindra Bank. So rate sensitives seem to be under a bit of pressure in the session today. Bring up the mid-cap and the small-cap end of the market, and the MRR chart should come up on your screen. I'll just show you what's happening at the broader end of the spectrum too. Just a whiff of the market breadth worsening. It's not quite showing out here because the stocks, there's still enough number of gainers. So for example, Diwan Housing Finance is still up about 6%. Oberoi Realty about 4% in trade. Reliance Power has gained. Godrej Industries, a mixed bag of stocks which have done well. What's not done well? While HEG is doing well, Graphite India is not, about 6.5% lower. M&M Financial Services, despite that tie-up that they've done for the asset management business, down about 3.5%, and some weakness in Sun TV as well. Dish TV, by the way, is down about 3%. The small cap end of the spectrum will come up on your screen. Jet Airways, the stock of the day yesterday, arguably at the small cap end, the stock of the day today as well, up about 12%. You would have really thought of Jet Airways as being a principal mover in the session today. It's just that what happened yesterday dwarfs the movement in today's session quite completely. There's some strength in a Radico Khaitan today after a number of days of a fall. What's not doing well? Lemon Tree amongst the stocks, Equitas and Ujjivan. I think those two stand out in the session today. There are lots of talks about whether there would be permissions for Ujjivan to have the minority shareholder to get a pie off the newly listed, the separately listed SFB as well or no. Now, don't quite know what the veracity of those rumors is, but I think that's the talking point which is leading to both Ujjivan and Equitas looking wobbly in the session today. Navneet, how has the derivative side of the market shaped up today?
Well, Neeraj, yesterday's bounce back was on account of some bit of short covering that was seen, but looking at the Nifty futures right now, 11,735 is where the spot is trading, but no major build-up when it comes to the futures side. And Nifty futures have traded like this, I think, for the last 10 to 11 sessions. We've not seen any build-up coming about, but interesting will be the bank Nifty futures, which were outperforming yesterday. There was some long positions being witnessed here. In today's trade also, the open interest is up nearly 5%, but weakness coming across the board as we speak. Pull up the India Volatility Index. Remember, the markets opened weak because of some geopolitical tensions in the Middle East, and right now VIX is almost at the high point of the day, up 5% at 14.6. Options data, maximum open interest on the call side is at the 12,000 strike, and on the put side it is at the 11,700 put strike. So probably that's the 300-point range that we are staring at till the next expiry on Thursday, June 27. And call writers, they seem to be back in action today because a lot of OI addition has been seen at the 11,800 call, and even deep out of the money now, 11,900 strike is added about 14 lakh shares. On the put side, your lower level strikes are becoming active. So 11,600 put has added about 2 lakh shares in today's trade. So the range remains 300 point. Important to watch now whether Nifty will once again breach its mark of 11,700 and the 50 DMA. Remember, twice or thrice it has breached in the recent past, but there is some buying which is coming at 50 DMA, which is somewhere about 11,680. In terms of stock specific, and Nifty counter Maruti, which is trading weak today after UBS has downgraded the stock to sell, also cut the target price to 5,800 from an earlier target of 8,000. On the future side, no major build-up has been seen, but just wanted to address the stock, which is trading pretty much weak, down about 3%. Ujjivan is the other one where significant amount of open interest build-up has come in today's trade, and that too on the short side. We'll discuss more about why these stocks are falling, Ujjivan and Equitas. Today is the third straight day of fall coming in here, and the stock's also fallen below its 100 DMA for the week. Look at that, 33% higher when it comes to the open interest build-up, clearly indicating that at every level now traders are taking position on the downside. The spot is down about 7%. This is the low point of the day. Mrpl is the other one where both price as well as open interest action has been seen, but the stock continues to trade below its key moving averages. Since the morning session, there was some strength seen in this stock, and even when the markets have corrected, the stock is still sitting with gains of about 4%. The other one, important to highlight at least, Jet Airways. It's out of the ban for today's session. Remember, there was a circuit imposed despite of stock being in the F&O market because some parameters in the opening trade was not met. That circuit was open at 10:45 today, and after that the circuit filters were applied. Post that, it's open for trade, and now 16% higher, some positions being taken on the future side. But if you look at the data right now, it indicates that it may once again enter into the ban for tomorrow's session, Neeraj.
Okay, well, let's get in our research team members to try and talk about all the key movers in the session today. UBS has downgraded Maruti to a sell from the earlier rating of a buy. Yatin Mota Johnson with the details of the report, whether it has something new, whether anything in the report surprised him at all or no. And Yatin, emission-related norms issues seem to be the crux of the downgrade.
Neeraj, this is more or less nothing new as far as the UBS downgrade is concerned. If you look at UBS at this point in time, they have downgraded the stock to a sell from buy, so it is a multiple notch downgrade coming in. The target price is 5,800 from the earlier target price of 8,000 rupees. More importantly, it is unlikely to benefit from the BS6 transition according to UBS. And more importantly, remember, last quarter in the results, Maruti announced that they will be trying to shut down the diesel car production moving ahead. And UBS does believe that this could be some serious negative coming in moving forward, because they will not be able to garner the desired volumes moving ahead. In fact, they say that the limited room to outperform is a risk, given the fact that they are looking to completely exit the diesel portfolio in FY21. So from BS6 to the exit in the diesel portfolio and general slowdown that we are looking at for the last 6-8 months could be the reason why UBS now believes that it is time to sell a stock like Maruti.
Yatin, on a valuation basis, a lot of people differ out here, but would it be fair to say that it is trading in or around the long-term averages, Maruti?
Well, Neeraj, absolutely on the valuation front, a lot of correction has already happened in the entire auto pack. In fact, if you look at the auto index also, the NSE Nifty Auto Index, it is probably trading at a 3-year low. So given the fact that the kind of correction that we are seeing and the kind of earnings decline that we have seen, there has been surely peak contraction, but it's very important to look at how really do the volume growth shape up from here on, because the auto companies are still hoping that from July, August, the volumes could recover. As of now, there is still pressure. When you speak to dealerships or the companies, the original equipment manufacturers, they do believe that there is some pain right now in the system. Most of them have planned plant shutdowns, so the volume picture is quite low. In fact, if you look at a company like Maruti, the operating leverage for them is quite high. So more volumes they do, the better the operating margin. The lower volumes they do, the weaker the operating leverage, and hence the margin. So the high correlation of volumes to margins is something that one needs to watch out for. If the margins were to fall from here on, probably that warrants a PE downgrade. But as you're mentioning, very close to the historical PE bands is what the entire auto pack is trading at right now.
Okay, Yatin, thanks a lot for bringing all those details. And moving on, Deutsche Bank has reiterated its positive stance on UPL as it believes some of the key concerns are overdone. Yash Upadhyay joins us with more details on that. Yash, over to you.
Afternoon, Navneet. So, Deutsche Bank has, addressed a couple of more concerns in their report as compared to the one which came out yesterday from HSBC. The first being the fact that they believe that the impact of the change in the taxation laws in Mauritius would not impact the company's subsidiary, which is UPL Corp. They highlight the fact that the company has 3 board of directors which are of Mauritian descent, as well as the fact that the company employs an adequate workforce over there and has several product registrations under the name of UPL Corp, which would mean that it should not get impacted from any changes in the laws over there. As far as the impact of African swine fever is concerned on the pork industry in China, they say that the impact should be limited. Now, UPL makes a product called Iris, which is used as a fungicide for soybeans. The total contribution of the product to the company's overall revenue stands at about 12 to 13%, and more specifically when it comes to the Brazil business, it would only impact by about 2%. Now, they say this is because the sowing season for soybean would only start in the month of September, by which a new population of pork would enter the market, which would not get impacted by the African swine fever. Also, the fact that if at all this were to impact the soybean acreages, it would only be minimum according to their estimates. Thirdly, they highlight the higher debt on the company's books on account of the Arista acquisition. They had taken a debt of almost $4.1 billion, but most of it is long-term in nature, which means almost 80% of this debt would be serviced after 3 years from here on. So that does not create any sort of a liquidity problem for the company. And lastly, as far as the pledged promoter holding, which is pledged, only 0.6% of the 28% promoter holding in the company is pledged. So that is an insignificant number. So the street fear that the promoters would have to sell some of their pledged shares in order to service the debt, that is a concern which, according to the brokerage, is overdone. And they continue to be positive on the counter. They maintain a buy rating with a target price in excess of 1,000 rupees at 1,050, in fact, which is a sizable up move from the current levels about 886 or 890, which the stock is currently trading at.
Yes, just one follow-up. Yesterday we were talking about this note which was bearish on UPL. Today we are talking about a note which is talking positively about UPL. Were there any common points or stark differences between both the analysts?
So it wasn't, the HSBC report wasn't entirely bearish. So they highlighted the concerns that, the trade war would impact soybean imports from China as well as the African swine fever. But a common theme that you're talking about across both the reports was that they see the impact to not be too significant to account for such a fall. If you remember, over the last 3 trading sessions, the stock had fallen close to 15%. So most of the brokerages, they continue to remain positive on the long-term, growth prospects for the company, with the synergies kicking in of the Arista acquisition. But overall, they do not see a significant impact of all these concerns that were highlighted by both the brokerages.
Okay, Yash, thanks a lot for bringing in all those details. Brokerages like HSBC and Deutsche highlighting concerns, but both of them still have a bullish stance in this one. And from yesterday's fall of about 8% on closing basis, the stock seems to have recovered a bit, though it's up about 2%. It's off the day's high, though, what we had seen. Okay, moving ahead, the other stock, I think, which is in focus is Aurobindo Pharma, as the company has received a warning letter from its API facility, which is at Srikakulam in Andhra Pradesh. The letter comes following US FDA inspection of the site, which was conducted in the month of February this year. And the inspection was done between 4th February to 9th February. Now, what does this warning letter mean for Aurobindo Pharma going ahead? They can't get any new approvals from US FDA, but the existing operations can continue. So I think the overhang will be no new approvals which they were looking forward to will not be coming by, and that's the reason precisely why you'd seen that correction coming by. In fact, we did speak to a couple of analysts and asked them what could be the impact of this warning letter. HDFC Securities analyst indicated that they do not see much of an impact due to this letter, as Aurobindo will be able to switch to other API plants for their raw material, though they will be watching out for what US FDA does for the balance of the two plants right now. So that's the reason why the stock has been under pressure in today's session. And when does this overhang comes to an end, company will have to provide some sort of remediation. Till the time that's not provided, they will not be getting any new approvals for this particular API facility, Neeraj.
Yeah, Amay Chalke that we spoke to, of course, also mentioned that This would have a bearing from FY21 onwards. FY20, he did not see too much of a problem, but Citi's Prashant Nair, I believe, had written a note earlier which spoke about this possibility and him believing that there could be a potential impact. Well, don't quite know about what the fundamental impact would be, but the stock certainly reacted.
Yes, it has reacted, and it's at 601 right now, down about 4%, and not seen any sort of recovery after that gap down opening after the company informed the stock exchanges about this warning letter that they have received. Okay, let's move on to our corporate conversation for the day. Indian chemical companies are in an overdrive mode to ramp up production after the clampdown in China. Now, most firms expect strong growth potential not only in the domestic markets but also in the export market. Focus has shifted to execution of expansion plans. Let's get a check with the CFO of Bodal Chemicals, Mayur Padhya, who joins us on the phone line. Hi Mayur, good afternoon and thanks a lot for joining us today. First up, just give us an idea, because the last quarter saw some bit of dip in the margins because of the prices and realizations which were subdued. Has the trend changed in the current quarter? Have the prices rebounded?
Prices for finished good have not rebounded. But our raw material prices are going down and they are stable at lower level. So our margins are more or less intact and we are not facing any issue as far as margins are concerned in the current quarter.
Okay, and what about the situation in China? Are the prices stable there?
In China, since last 1 year, we can say we have not heard any bad news as well as good news. So things are more or less stable over there, and whomsoever are operating, they are not able to operate at the fullest capacity. They are restricted at about 60% or so. So there is no possibility since that China can once again become aggressive in this market and can affect India's manufacturer. So things are stable over there because of the strict observance of norms about environment. And that is very good sign for Indian manufacturer, and coming time seems good for all of chemical companies, including dye intermediate and dyestuff companies.
So there is no supply disruption that has been witnessed in the Chinese market. And just for our understanding, Mayur, do you import your raw materials from China?
Very few, hardly 4-5% of the total requirement of our company. So that's not a significant, and we do have other source also. So we are not dependent any way on China.
Okay, and how's the export side of the business looking like? I believe the company has been looking to increase exports, which now form nearly 48% of your total revenues.
Yeah, export we are doing very good. Last year itself, there was a 71% jump, and we did almost 600 crore export, and that is going to be good thing for the company because we are expanding our business in dyestuff, and our majority of dyestuff production is for export. Almost 70% of dyestuff what we produce, that is for export. So gradually we are expanding in that area.
Okay, and what's the added capacity that one can, see coming on stream for FY20? What sort of additional revenues? Because I believe you had announced some expansion plans.
Yeah, we have announced expansion plan, but what we have announced, that expansion will come in 3 years from now. For FY20, no revenue will generate from the new expansion, what we have announced. But definitely what expansion we did last year and earlier year, we have expanded our dyestuff capacity from 17,000 metric ton per annum to 35,000 metric ton in last 1.5 years. So that is still underutilized. Last year we have utilized almost 64% of that capacity. So gradually ramp up will be there, and this year good quantity growth will be there for dyestuff.
And what's the current capacity utilization level that the company is operating at?
See, we have 3 divisions. One is basic chemical division. Over there, most of the products are in continuous process plant, and over there about 95% utilization is always. Another is dye intermediate division, where batch type production happens, and maximum we go 80-85%, and over there 75% around utilization is there. Third is the Dyestuff Division, where, as I mentioned, last year it was 64%, but presently we are going ahead. Maybe currently 67-68% utilization should be there for the current quarter in Dyestuff.
Okay. May you leave us with some sort of guidance? What sort of numbers can you do for FY20 in terms of top line and also bottom line?
For top line, it is difficult for us because most of the raw material are linked to crude. And whenever there is a crude movement, our finished good prices also moved. But quantitatively, yes, we are going to do better compared to last year. For coming 2-3 years, I can give you guidance that we are targeting about 8 to 10% top line growth and CAGR about 10 to 15% bottom line growth. That is what we are targeting, and we are working for that.
Okay, Mayur, just one more question. Last quarter, I believe margins were subdued or they came lower because of high cost inventory that the company had. Has that pressure eased off in the current quarter? Can we expect the margins going back to normal, what they are, between 15 to 16%?
Yes, that pressure is till February, March only. So presently we are not affected because of that high price inventory. So margin should once again be better what we were operating earlier. So 15-16% is very much possible, not an issue. And here at this time we can say that compared to our peers, they are not able to give good result, but we are sustaining our result because of our integration model. So integration model is now playing its role, and that is now everybody is witnessing. Because of that, our margins remain more or less intact and not subdued much.
Okay. Mayur, we leave it at that note. Appreciate you joining us today and taking us through what one can expect from Bodal Chemical. And in fact, if there was any sort of impact seen with regard to supply disruption, which the street has been talking about in China, clearly indicating they source only 4 to 5% of their raw material from China. So they've not faced any sort of pressure. Though the margins in the last quarter were subdued, they expect that to ease off in the first quarter, and clearly highlighting that margins will go back to normal levels of about 15 to 16%.
Well, let's wait and watch what happens to some of these specialty chemical companies. But while we are talking about specialty chemicals, the markets, the Sensex at least, has worsened further, so about 1% lower currently. The Nifty Bank has held out well. The question only is that on a day like this, do experts believe that it's time to maybe take advantage of the weakness and go long? Or yesterday was a flash move which was not suggesting any kind of trend. Now, Manav Chopra, Indiabulls Ventures, is suggesting that the Nifty's charts are poised for an 800 to 1,000 point upside. This is the Nifty, by the way, that I'm talking about. And, well, that points towards some bullish outlook. Navneet, all the bulls will be very happy listening into this conversation.
Yeah, especially in today's trading day when there was a rebound and once again we've slipped, Manav. Thank you for joining us. Tell us the first chart that you have for us on Nifty. You're suggesting that in the near term, now that bottom has been made and you are expecting the index to move to levels of about 12,400 or to even 12,800 levels.
Yes, absolutely. In fact, since quite some time markets are in a very strong uptrend, and in a structural uptrend, it's important to identify the important intermediate lows. So my first chart is talking about the historical data of the seasonality of the market index. So it's important to also understand the timing of the markets. One is a price study and one is the time study. So historically, whenever we've seen the price study, we have this data of from the June lows to July highs are the key parameters I've considered for past 18 years of Nifty index.
Wow.
Okay, so okay, when we are looking at this data, it's basically we are considering the June lows and July highs are the key parameters, and the percentage change, if you can see average, it has given 11.6% returns in past 18 years. The market structure has changed in past so many years, and if you also consider only the past 5 years of data, we've not seen all along bull rally, but if we consider the past 5 years data, that also provides us an average of 8.5%. So looking at this data, it gives us clear indication that July is a good trending month for the markets. And historically, usually markets have bottomed out in the third week of June. So we are right now in the third week of June. And not every time any trader would be able to buy the markets at the lows. So this data is from the lows to highs. But if we consider also the June closing average to July highs, it gives us an average of 8.5%. So which is also a very good average to get into and position yourself for the long markets. In last 5 years, the other data when I had back tested. In last 5 years, July's month has exceeded June highs and also has closed above it. So in short, this all time analysis is hinting for a June month to probably enter long positions and look for a trending month for the month of July.
All-time high on Nifty that would be then, because
Absolutely.
I think highs were somewhere about 12,100.
Yes.
Just one query I have on the chart. You've plotted the lows and the highs of the month of June to July of from 2000 to 2018, and you're saying in these months an average return that we've seen in these months is about 11%.
Yes, 11.5.
And that's for the month of July or June?
This is taking from the June lows to July highs and the percentage differences here.
Okay.
So we have the time analysis which has confirmed that okay, June is a month to enter. The next chart that I would like to highlight is the price. So now we need to understand how is the market poised in terms of the Nifty index. So on the top we can see is the price chart, and the lower band is a stochastic indicator. So in an uptrend you usually would want to identify the intermediate low. So if I take the chart from the start, taking it from October 2018. So whenever there has been a buy in the stochastic indicator from the oversold levels, if you can see, the prices have
here,
yes,
right?
from there. So the prices have often seen so prices have often seen a 4.5% move from its lows and has exceeded its recent swing highs. If you can summarize this, yeah. So this is the low that was formed, and it managed and exceeded its recent swing high, and again a low from here. And again, if there is a buy, so we can see there has always been whenever there has been a crossover, there has been a 4.5 average % returns in 15 sessions for the markets. And currently we have seen a corrective decline in the markets recently from its all-time highs. We are still in a rising up channel, and we have again received a bullish crossover in the stochastic indicator. So looking at the time and the price, when both these quotient are coming together, it's suggesting a very high probable event for the markets that this is a short-term bottom in place. So the recent lows that the market made on last Thursday of 11,625 is definitely suggesting that it's a very high risk-reward ratio entry at the current levels. And looking at the price structure at the channel, this also provides us the first target of 12,400 and eventual 12,800.
So 12,400 is the target for the month of July.
Yes, 12,400. So looking at the entire data, even on the price chart, so we've seen this 15 sessions of aggressive rally, and usually such patterns are also achieved in the 4th week of July. So next 20 trading sessions would be very important and trading for the markets on the bullish side. And we have seen an average returns of 5% to an average of 11%. So this is the bandwidth that you have to expect on the upside.
So today is the opportune time to create longs?
Absolutely, because your risk reward is quite limited. We are at 11,740 and the last low was at 11,625.
So we've bottomed out with the correction that we've seen in the past, and what everybody was talking, index is consolidating.
Correct.
That phase has also come to an end.
Yes, absolutely. In fact, from last 1.5 years, if you see, markets are in a broader corrective phase, and for it to throttle on the upside, you have to actually break this channel on the upside. Then you would get into a structural bull market. We are still in a rising up market, but we have seen swings, up moves and down moves. But once we break above 12,400, that would provide the additional throttle for the markets going forward. And since the price and the time, both questions are coming together, I think we could probably see 12,800 if the momentum is
And that's
sustained.
the target for which month?
July itself.
July itself?
Yes.
Okay, so that's about Nifty. According to Manav, we've already bottomed out, and he expects the month of July to be good for the markets. In fact, his first target is about 12,400. But Manav, what about which index are you tracking?
Yes, so I'm very closely looking at the infra index. In fact, this has been one of the sectors which has been underperformer since quite some time. And if we are looking this sector recently, I've drawn a trend line from the lows of 2013. And there was another low which was connected at 2015, and recently around we've seen a test of the recent low. So basically, this validates the long-term support line. And we have also witnessed that, there has been a lot of sectoral changes which happened in the markets. From 2018, we've seen the auto sector come down, underperformance by the pharma, and a lot of consumption sectors have also come down. But this is one sector, if you can see, it has started actually moving higher. It has formed a very strong morning star pattern on the monthly chart, and usually this formation indicates a good bottom in place, and it's very difficult to negate this kind of a pattern. And this becomes a very strong support. The components of this sector has a heavy weightage in stocks like Larsen, Siemens, and we've already seen that run up coming into this sector. I think this is still in an early stage of the next bull run. This story is for at least next 2 or 3 years. I sense if we see a breakout above 3,100, which is very likely, this sector has an upside of at least 40%. The how we derive the target is we take the width of the pattern and then we project it from here on. So that gives us an upside target of 40%. So going forward, I think the new theme and the new sector that one should keep eyeing is the infra space. I think Larsen is definitely going to be the top pick from this sector. And power as a space from last 10 years has been an underperforming. So Tata Power is also a crucial component in this sector, and it is still trying to consolidate and kind of make a base. So eventually I think that is an unexplored space, and a good accumulation has been witnessed.
So to play this theme, you're choosing L&T and Tata Power, right?
Yes.
Okay, fair enough. So L&T, Tata Power and Nifty are your calls from Manav. Neeraj, over to you.
Well, let's watch out for these names. Navneet, Manav, thank you so much for bringing us those perspectives. And it's always good to do some medium-term chart looking while we're talking about the here and now. So we mix the here and now with what could happen over the short to medium term. We'll, of course, ask Manav about what his near-term call is as well. He might have this medium-term call, or rather a short-term call on what the index could do in the month of July. But today the markets are looking slightly skittish. It'll be important to get a perspective on that as well. So actually, let's kickstart that conversation now. Last one out of trade left. Shitij Gandhi of SMC Global Securities with us on the show. And then, of course, we'll get in Manav's view on the near term too. Shitij, good having you. Thanks so much for joining in. Let's talk about the here and now, the short term. 98 points off for the Nifty 50. Though banks are not cracking as much, is that an indication that this fall may be short-lived? What would you advise your clients to do if they want to do a trade from a next 1-2 day perspective?
Rightly mentioned, in yesterday's session we have seen bulls are making their comeback to the markets after the markets have been beaten down from its recent all-time highs, say from 12,100 levels. One point I want to add on a technical basis that the rally we have seen in the Nifty from 11,100 to 12,100 levels, approximately 1,000 points. So on a technical charts, on a daily parameters, I believe this is a 500 point downfall we have seen from 12,100 to 11,600, which can be considered as a hefty, healthy profit booking or a healthy correction. So this is once again a good sign for the Nifty for moving forward. And as of now, on a shorter time frame, I believe 11,600 mark, that is a very, very crucial support levels for the Nifty moving forward. As on a technical parameters, the Nifty has made a double bottom around 11,620 levels in yesterday's session, and from there on, once again we have seen bounce back towards 11,800 levels in yesterday's session once again. And from the derivative front as well, I had observed that we have seen a kind marginal put writing coming into the 11,700 and 11,600 put strike, which once again point towards the more upside into the prices moving forward. So as of now, yes, we have seen some kind of a retracement after yesterday's rally in today's market. Nifty is almost trading down by nearly 100 points, but I believe in coming week once again bulls will make a comeback into the market, and on a technical on the technical levels move above 11,800 levels will once again push the market towards 11,950, 11,930 levels in coming week. So I will be a bullish in coming week for overall market.
Okay, so essentially, Shitij believes you can buy the index right now as well. Manav has been bullish. Manav, just a follow-up to that then. Would buying any kind of options be a good idea?
Yes, in fact.
And what strikes, what dates?
Yes, see, looking at the current scenario, we can create multiple strategies. The first thing is that we have recommended our clients to buy July 12,000 calls, and we expect a good upside that, looking at increase in volatility, will not be surprised to see a double up. For option sellers, selling 12,500 put is another strategy, because we expect that to be, expire worthless. And for a conservative trader, we are recommending to buy 11,900 calls and selling 12,500 call. So that is a spread which we have also initiated. So these are the kind of spreads that you can take a view. But the overall scenario is that yes, there is a high probability we are bottoming out, and this opportunity on the decline should ideally be looked into for buying at the lower levels.
So by the July month, 12,000 call options.
Yes.
At the current prices.
Yes.
Okay. So, well, that's an index strategy. Now let's talk about specific stocks. Shitij, I'd like to come to you first. In light of this bullish view that you have for the index, what are the stocks that you're recommending?
All right, like we have seen from last 3 to 4 sessions, especially mid caps have been hammered down very badly, but I believe the index have been holding out it with it higher levels just because of the support from the banking stocks, especially from the private banks and PSU banks both, and the frontliners can outperform in the coming week as well. So from a positional basis, say from 3 to 4 trading sessions, I have a banking stocks onto my radar for a buy call. So first of all, I would like to go long with a private bank, that is ICICI Bank. Currently stock is trading around 430 odd levels. I believe the momentum into the ICICI Bank can carry over towards 453, 455 levels in coming week. So as a positional trader, I would like to take a long position in ICICI Bank, keeping a stop loss just below 420 levels from here on. Take a long position for an upside potential of 453 to 455. The second call would be again from a banking counter, and this time it would be from a PSU bank. The SBI would be my next buy call. Currently stock is trading around 349 levels. So from here on, take a long position, keep a stop loss just below 338 levels for a positional trade, and for upside target of 361 to 362 level. The last stock would be again for a buy call, and that is a Voltas that's coming onto my radar. The currently stock is trading around 620 level, and in last 30 minutes we have seen a sharp recovery into the prices, and a long build-up has also been noticed from derivative point of view. So I believe the momentum play can be taken into Voltas as well. Keep a stop loss just below 610 levels for upside potential of 640 to 642.
Okay. Manav, what about your stock ideas? You incidentally also have a State Bank of India within your list.
Yes. So I also looking at this chart, of SBI, it has really played out very well recently and has been forming a series of higher bottoms. The overall structure for this stock has been bullish, and I sense if the large cap has to play out on the Nifty 50, SBI would definitely be one of the leaders, as it has also breached its 10-year channel formation. So for the near-term perspective, 335 is the stop loss for SBI. We expect an upside target of 390. My other pick would be a buy on Ultratech Cement. The prices after a recent decline has seen a good bounce from its oversold levels, and this recent decline was more or less corrective in nature. So we expect the stock to test its recent swing highs, and overall the risk reward ratio is quite favorable. Recommend a buy into this, a stop of 4,500 for an upside target of 4,950.
Very interestingly, people are sticking to large cap names a lot and not so much in the mid cap space, maybe with reason too. Let's get in a fundamental voice on the show. Jagannadham Thunuguntla of Centrum broking with us as well. Jagannadham, good having you. Thanks so much for joining in. Just straight off the bat, Jagannadham, a lot of voices have been positive on the corporate facing banks, and while hitherto conversations have centered fundamentally around an ICICI Bank, Axis Bank, to an extent maybe even an IndusInd, now SBI is coming firmly in focus. There's talk of recapitalization, and if the economy shows some bit of pickup, it might do well too. Would SBI or the likes fall within your list of candidates that you would be sanguine about?
By now it is quite evident that markets polarized behavior that we had witnessed over the last 7-8 months by concentrating the entire bulk of the rallies in the 10-15 stocks. I think that is playing out, and most of the market voices and analysts are going through recency bias, meaning thereby whatever happens in the recent times naturally will impact your psyche and thought process a lot more than what happened with the long time gap back. So I think most of the market is going through that. I think where action is happening, let's say ICICI Bank, Axis Bank, SBI, where naturally people are betting in there, but just that the juice, the bulk of the juice, there was easy money was taken. Having said that, upsides may be coming on all these stocks, but I think you will make money if you can patiently wait for those eventual dips, and then you can use those dips to buy. I think the entry price becomes extremely important if you have to see meaningful returns on your portfolios, meaning thereby we are very positive on all the names that you said, just that your buying price has to be good. As far as IndusInd Bank is concerned, I think probably analysts and the markets will wait for the upcoming result season, wherein they want to hear how much is the real stress book exposure they have, meaning thereby how much provisions they have created. Meaning thereby, I think IndusInd Bank will there be little bit still questions in terms of the sustainability of the rally or the momentum. But as far as ICICI Bank, Axis Bank and SBI is appearing to be a clear trade, but having said that, it is getting a crowded trade.
Okay. Jagannadham, what would the verdict be when it comes to autos? Today under pressure as well, there are brokerage downgrades that have come in. Don't quite know if GST council meeting will result in anything substantial when you have the largest automaker saying that there is no need for a GST cut, let that money be used to improve infrastructure. So that near-term tailwind might not be there as well. Would you use these weak spots as opportunities to buy into some of the high-quality auto names, or would you believe that there is some more downside possible? Maruti, for example.
Yeah, while the storied for example, while the storied concept of Maruti with a clear leadership of about 51% market share, we haven't witnessed that kind of market share by any market leader anywhere in the world. I think we are large country with large auto demand, and then having 51% market share is extraordinary story by any standards. Having said all that, the stock is still trading at 25 times FY21 multiple. Make no mistake, it's not. I'm not even talking about FY20. I'm talking about FY21 estimated earnings. We are talking about 25 times multiple. A company which is facing a 20% degrowth in its volumes and clear slowdown in sales as well as margins, expecting 25 times multiple on 2 year forward is a little bit a stretch. Keeping that into account, nobody is taking away the leadership or the kind of story that Marty has created. Just that we should be mindful of the fact that the valuation at which you are buying. Make no mistake, 2014 May when Modi 1.0 started, in the sense first tenure of the Modi started, the Marty was at 2000. Even from that context, the stock is still a 3.5 timer. Make no mistake, in the sense it's a great story, just that the current slowdown you may get those entry prices you may get probably a bit more better.
Okay, that's the view coming in on the auto pack, but the biggest sectoral loser today is the Nifty Pharma Index, and it's just not about today. The Nifty Pharma Index has been giving you negative returns right from 2016 till now. We've only seen stock prices coming lower actually. Jagannadham, do you expect the tide turning for these pharma companies anytime soon? Because today also we had a negative news coming with regard to Aurobindo Pharma. Pricing pressures continue, and even the growth in the domestic market seems to be lagging.
I think pharma will be in a very uncomfortable position till the time of US elections November 2020. Make no mistake, in US for the middle class there, the healthcare and pharma assume extremely high importance because of the very, very expensive healthcare facilities they have. I'm sure Donald Trump, to play to his gallery and to play to his cadre of voters, I'm sure he'll put pressure on the pharma industry across the world. India will definitely be in the front line of fire. So keeping that into account, difficult to expect pharma to rally anywhere before November 2020 US elections. I think that hangover will remain. But having said that, as of now, it is clearly beaten down and at a contrarian trade. But I think if you want to really pay contrarian, there are so many opportunities available in the market. So I'm not sure why one has to be so gung-ho about pharma at this juncture.
Okay, that's the view coming in on the pharma pack. But Jagannadham, let's talk about your individual fundamental picks in this market. And you bullish on something like HDFC Life. Take us through the rationale behind it. What sort of returns do you expect from this company in the next 1 to 2 years?
Insurance, we feel, is a multi-decadal opportunity, and I'm not even talking about 2-3 years. I'm talking about a good 20-year kind of thing. And add these insurance companies to your portfolio. The insurance sector at this juncture is exactly where, let's say, banking industry, let's say 20-25 years back. As of now, insurance is highly under-penetrated, and then still it's barely at 2-3% kind of penetration. Long way to go in terms of increasing the unit holders. Meaning thereby, I think we can expect enormous opportunities in the insurance sector. And HDFC Life, SBI Life, and ICICI Pru, 3 listed life insurance companies. Out of that, understandably, HDFC Life has the blessing of FIs and the high quality investors because of the tag of HDFC. We believe it will continue to enjoy its premium in terms of the valuation. And if you can use the dips to buy, keep accumulating. Don't build the insurance portfolio for you. Build it for your kids. I think it's one of those huge wealth creation opportunity. Don't miss the fun.
Okay, the next one is on Rbl Bank, and we've seen some outperformance coming in from a couple of these banking stocks, be it RBL, DCB, and Federal Bank, at least in the recent past, post the Q4 numbers. But why Rbl Bank?
Rbl Bank, I think the clear outperformance that you have witnessed and that you are referring to came interestingly after the Island FS episode. After the Island FS episode in the last week of August, almost entire banking and NBFC sector was beaten out of shape, whereas Rbl Bank was a clear outperformer. And there is a reason, because the total exposure of Rbl Bank to Island FS is barely 15 crores, that to cash collateralized instrument. So that means when the Island FS had a 90,000 crores of exposure to the entire banking system, if Rbl Bank can able to escape the exposure like Island FS, that speaks volumes about I think at least the underlying diligence standards. One of the reasons that the smart money moved to Rbl Bank was that the lack of exposure to Island FS given a great amount of comfort. The stock has already rallied good 40%, almost from 500 rupees to 700 rupees post that Island FS episode. Just now it's taking bit of cool off, bit of profit taking, and you can use these dips to start accumulating. We feel Rbl Bank has great story building up, and I think it is one of those stocks. It makes a lot of sense to be in the portfolio. Just that you should be using the dips to buy.
Okay, let's just finish your fundamental picks. Then the last one you have is on L&T. Do you expect any sort of revival with regard to the capex that one has been waiting from the private sector?
For the first 5 years of tenure of Modi government, frankly, L&T has not been a great performer in terms of the stock performance. It has been a great laggard, and then it has frustrated the investors. But having said that, we believe in the second tenure of Modi government, there is a major chance that infrastructure revival may receive huge amount of thrust, and L&T will be a clear torchbearer or a clear leader in terms of to take advantage. So, and also after many years, I think first time management has spoken in the shareholder friendly tone when they referred about buyback about 6-7 months back. That's a different matter that somehow it couldn't get the clearance from SEBI, but we believe at least that shareholder friendly tone has come back. We believe the dips can be used to buy. It is available at very inexpensive valuations. We feel upsides are there, and it's a clear proxy on the infrastructure theme, and about 3 lakh crores of order book in hand is giving enough comfort for the revenue visibility for the next 3 years, and it's making of a good wealth creator in the second tenure of Modi government.
Okay. Jagannadham, one final question, and that is on the 2 stocks which have looked slightly weak the last number of days. Would you fundamentally believe any of them are worth a buy? One of them is a Yes Bank, the other one is Indiabulls Housing Finance.
I think a very difficult question at this stage because of the amount of news flow that is going around. I think markets are at a stage where highly bipolar market, where the companies and the managements where market believes have a good track record and reliable managements. The market is giving 5 price to book, 6 price to book kind of multiples, and wherever market is slightly uncomfortable and market is even started trading at sub book values. Very bipolar market, very difficult difficult to understand beyond a point. But at this, till the time I think S Bank able to raise its funds, the $1.2 billion fundraising that they referred to, market will be keenly watching at what price they will raise, and I think that will set the tone for the revival of S Bank. I think the takeoff point for the S Bank is nothing else. It's all about the fundraising, whether they will able to raise, and if they will able to raise, at what price. I think that is the moot point that investors have to keep a watch on.
Okay, Jagannadham, we'll leave it at that. Thanks much for taking the time out and being with us today. Appreciate.
Thank you.
That's from Jagannadham, Thunuguntla. Some stocks that you can buy for your grandkids. Well, look at those as well. Let's try and figure out what people can buy for themselves as a trade. We spoke about bullishness on the index. Manav, I want to ask you about India Bulls Housing or Yes Bank. Difficult ones. One which is relatively easier is IndusInd Bank. Yes. How does that look on the charts for somebody who doesn't have a position? Is it worth entering?
See, I would only recommend trading position in IndusInd Bank for a simple reason that the structure of this stock has been deteriorated in past few months, and it has an important structural support at 1350 to 1400 on the lower side, and we have seen a strong active buying coming at those levels, and the oscillators are a deep oversold zone. I expect a mean reversion into this stock as long as 1400 supports are held. There is a possibility of at least 7 to 8% short-term momentum rally on the upside. 1600 could be the maximum upside target that we can look into this, but beyond that, the stock faces series of resistance. So I expect a broader trading band into the stock of 1400 on the lower side to 1600 on the upside.
Okay. The other is the weakness that we've seen in Maruti, and I think today the volumes would be higher. If we can bring up Maruti first and then show the AV80 function of on the Bloomberg terminal to just show you the volumes. I don't quite know, but I reckon that maybe, just maybe, today the stock would have fallen with a fair degree of volumes. Yes, the 20-day average volumes, which is the blue line, has anyways gone up, but the white line is the one that we are pointing towards, which is the volumes today, and substantially higher than the 20-day averages. So the stock has fallen, and fallen on good price and volume activity in the session today. Shitij, what do the charts of Maruti Suzuki indicate?
See, looking at the chart structure of any of the auto stocks, no other stock is looking much more promising to me for a buy call. But yes, if I look at the charts of Maruti, first of all, on a daily and the weekly, both parameters, the stock has been maintaining its downtrend ever since it has broken, the psychological level of 8,000 a long time back. But since then, we have seen kind of a pullbacks onto the charts, but neither of them have been sustained at the higher levels. And on a current juncture, on a shorter time frame, I believe the 200 days exponential moving average on weekly charts, which was placed around 65 or 50 levels, that has been breached in today's session as well. And we have seen addition of open interest of nearly 4% with a fall in price of more than 3% in today's session. So I believe the bears will likely to keep control onto the script, and on a downside, if any time it breaches 6350 levels, the more downside possibility towards 6200 levels cannot be ruled out.
Okay. I was trying to think, Navneet, as to if technically it is looking so strong to our experts, and if the index has to move to 12,800, what can carry there? It's difficult to fathom the HDFC twins moving up dramatically from where they are right now. They didn't fall as much from these whatever levels. Reliance is under if they do some stake sales or whatever, an IPO, yes, but otherwise Reliance needs to perform dramatically well for the index to do well, and maybe some support from IT, because that index, in connection to what the index Nifty has done, has maybe corrected a bit. So if it has to be a 500-600 point gain on the Nifty, Reliance and IT have to participate.
So far the rally has been polarized, but that's a very interesting point about IT. Whenever there was any sort of correction coming in for Nifty, I think there was some support coming in from Nifty IT. A lot of these IT stocks had been very resilient to the sell-off, in fact, what we've seen in the recent past. But rightly mentioned, the rally has been polarized, but if one were to expect index inching higher by another 500 points, which are the stocks one would still think about? Reliance, HDFC twins.
But HDFC twins have rallied, so I'm just thinking fundamentally, can they move up further, or would it be Reliance IT and
Reliance?
Would it be autos?
I'm not too sure, because off late the brokerage reports, I think the recent one which came in from JP Morgan, they have shown some sort of skepticism when it comes to their cash cow business. That's the refining and the petchem business. They do not expect this particular side of the business to reap more benefits what they've been doing in the recent past. And I think I was just reading one article in Times of India which highlighted right now it's all about InvITs where they're looking to divest and raise money. The other one is they may just look to list Reliance Jio next year, but that's too far-fetched right now. Whether they would look to unlock the value of their telecom business. Remember, that's the only company, I think, in the last 2 quarters which have reported some sort of profits when it comes to the telecom business. But ARPUs in the last few quarters have been declining for this one.
Yeah, that too. Well, maybe they need, well, if they raise rates, then that's something that.
And not to forget the debt which they are sitting on. I think that's the major overhang now going ahead for Reliance Industries.
Yeah, known devils. What if they come out with something on the rates? And that could be something very, very interesting. Okay, before we take that break, we'll get in, of course, Shefali Malik to talk about what Ujjivan and Equitas are up to, because those stocks have been under a bit of cloud as well. But just wondering, one final question before this break. Reliance Industries, Manav?
Yes, looking at the chart of Reliance Industries, it has overall been consolidating since past few months. We have seen more of a time correction than a price correction. Structurally, the stock is still positive. The important support that we are looking into the stock is 1240 to 1250 is the support band, and which also coincides with some of its long-term averages. I sense in the near-term perspective, if this support is held, we could see a rally coming on the upside. The key breakout point for the Reliance on the upside would be at 1320 levels. So if there is a weekly closing in Reliance above 1320, that is the only initial triggers that could take this stock to the all-time highs and would also support the Nifty index. So at the current zone, I think any traders for a momentum play should look at the 1320 levels for this stock to enter long positions.
Okay, watch out for Reliance Industries as well. But I think what we need to watch out for today is what's happening to Ujjivan and Equitas. So both of them have slipped more than 4% apiece in trade. Both the companies, 6.5% for Ujjivan. And both the companies are supposed to hold a meeting with the Reserve Bank of India over the listing of the small finance banks. Shefali Malik is, gone through the norms and the uncertainty surrounding the two stocks and joins us right now to tell us what could possibly be weighing in on these companies. Shefali.
Well, this meeting was supposed to happen anytime in June, but it has not happened. We don't have any update. I tried to get in touch with the management, but haven't been able to get through them. So what was supposed to happen was the meeting was supposed to happen. Ujjivan last time told me that they had already made their presentation with regards to the listing norms. They wanted RBI to dilute some of those listing norms. Remember, as per the RBI regulations, Ujjivan Small Finance Bank will have to be listed by Jan 31 to 2020, and Equitas Small Finance Bank will have to be listed by September 4. So for Equitas, it's just about 2 months left to go for the listing. And a couple of days back, there was a report suggesting that RBI is not in a mood to budge. However, Ujjivan management told me towards the end of May that there is no fresh development, and the meeting will happen in which they've already made a presentation. They will further discuss it regarding this listing. And it's not just the listing of the small finance bank, it's also about the promoter shareholding. So as per the regulations, Ujjivan will have to maintain promoter shareholding of at least 40% till Jan 31, 2022, and Equitas will have to maintain the same till about September 4, 2021. So it's a combination of both. In the near terms, it's about the listing of the small finance bank, and the issue of the holding company discount is coming in, and hence the pressure on the stock prices. So we'll keep an eye on this meeting when it happens and what update comes out of it. However, going by how the RBI's mood has been with regards to the regulations, not just regarding the small finance bank, but with regarding some of the biggest institutions as well, it has been pretty hard in terms of its regulations. You see Kotak Mahindra or other entities. So going by that, it doesn't look like that RBI will dilute the shareholding norms, the listing norms for these banks. So that might keep them under pressure. However, just a few days back, UBS put out a note and they were pretty bullish on these small finance banks. In fact, a couple of other brokerages as well have been bullish on small finance bank purely on their business outlook. But this particular regulatory aspect may weigh down on the prices.
Yeah, well, certainly looking like creating a bit of a flutter today without complete knowledge of what's happened. Shefali, thanks so much for bringing us those details. So you got to keep this in mind when you're looking at Ujjivan and Equitas. Stocks have looked slightly wobbly. Let's see what they do. Shitij, very quickly, a quick 30-second answer. Ujjivan and Equitas, do any of them look good enough for a trade?
See, if looking at a trade for short-term trade, I believe Ujjivan is a much bearish structure is building up into the stock. The stock has broken down its recent support levels, which was placed around 300 levels, and from last 2 trading sessions we have seen short build up into the prices. If I talk about today's trading session, the stock has already added up a open interest of nearly 30% with a fall in price of nearly 6%. So one can take a short position in Ujjivan at current market price. Keep a stop loss just below 307 odd levels from here on, for a downside potential of 285 to 283 levels by next trading session.
Stay on, gentlemen. So much more to talk about. Time for a short break here on Countdown. On the other side, we get you the Fab 4 stocks of the day. At 3:15, we get you what dealing rooms are recommending, and then some closing strategies.